Let's talk about Bitcoin and the Bitcoin ETF. You feel differently about the two as investments?
I think it's great that finally we have a Bitcoin ETF, because there's many people that would own Bitcoin through an ETF. I would never do that. Why would I pay the fees? There's no added value through an ETF. I just own the coin directly. What I really like about it is it's sending a signal that the era of the crypto cowboy is over.
You see the headlines, Bitcoin hits new all-time high. Your group chat is buzzing with rocket emojis. And you're stuck on the sidelines, feeling like you're missing out. Every time you think about jumping in, you're hit with a wall of technical jargon, seed phrases, cold storage, and it feels less like an investment and more like a high-stakes computer science project where one wrong move could drain your account. But what if you could tap into crypto's potential without any of that chaos? I'm here to help crack open crypto ETFs, the regulated one-click way to add Bitcoin or Ethereum to your portfolio. No coding and no passwords that look like alien alphabets. Stick around, because by the end, you'll know how these things actually work, which flavor fits your comfort zone, and the 3 literal clicks to buy one inside your brokerage account. Think of an ETF like a fruit basket. Instead of grabbing one apple, you grab a basket that already has apples, oranges, and other fruits. One purchase, instant variety. Because the basket trades on an exchange all day, you can hop in or out while the market's open. No lockups. The company running the basket charges a small fee. Its expense ratio, usually well under 0.5% per year. That's it. Swap apples for Bitcoin and you've got a crypto ETF. Instead of you personally opening a crypto exchange account, the fund company does the heavy lifting. It either buys real Bitcoin, locks it in offline vaults, and issues shares that track the coin. Or they buy futures contracts promising Bitcoin later. Either way, you type the same ticker you already know. You still catch crypto's thrills and spills, but you never touch the blockchain. Spot ETFs hold the actual coins. Bitcoin doubles, the ETF aims to double minus a tiny fee. Coins sit in cold storage under armed guard custody. Futures ETFs never touch the coin. They just roll expiring contracts into new ones. Sometimes that costs extra so the fund can lag the spot price. Pick spot for tighter tracking. Choose futures if your broker only lists those or you want to avoid custody debates. Pros first. Crypto exposure lives inside a regulated wrapper right next to your Apple and Tesla shares. You can set stop losses, auto-invest, or reinvest dividends from other holdings. No fear of forgetting a password and lighting millions on fire. Cons: ETFs trade only while markets are open. Crypto never sleeps. If Bitcoin rockets at 2 a.m., you'll watch the fireworks on Twitter until 9:30 a.m. Management fees nibble at returns, tiny but real. You can't redeem shares for actual Bitcoin, so forget paying for pizza and Satoshis. Treat crypto like hot sauce, not the whole burrito. Depending on how much volatility you can stomach, dollar cost average monthly instead of investing the entire amount in a single transaction. Rebalance quarterly. If crypto rockets to 10% of your holdings, skim some back to stocks or bonds. Keep emergency cash elsewhere. These ETFs are still roller coasters wearing suits. The IRS treats crypto ETFs like stocks. Sell within a year, and you'll pay short-term capital gains at your regular income rate. Hold longer than a year, and you'll qualify for long-term rates, 0, 15, or 20% depending on income. Inside a Roth IRA, gains are tax-free after age 59 and a half, making spot ETFs a sneaky way to shelter crypto upside. Can I stake my ETF for yield? Nope. You own shares, not the coin, so no staking rewards. Are these insured by FDIC? Cash in your brokerages, market losses aren't. Will my ETF split? Only if the issuer says so. Rare, but possible. Can I short these? Yes, many brokers allow it or list options chains, but that's level 3 fire territory. Bring water. If this is helpful, smash hype, so the algorithm sends it to the next overwhelmed investor. Regulators can move the goalposts. Congress debates crypto daily. A spot ETF's custodian could get hacked, though cold storage lowers the odds. Futures ETFs might pay costly roll premiums when the future price is higher than its price today. And crypto winters are real. An 80% drawdown happened in 2018 and again in 2022. Only invest money you could mentally set on fire without missing rent. Yahoo Finance, Morningstar, or your broker's app show real-time prices, expense ratios, and premium/discount to net asset value. Set a price alert so you're not glued to the screen. Read the ETF's prospectus if you want to, but the first 5 pages give you holdings, fees, and risks. If the fund's assets are tiny, favor bigger ones to dodge liquidity hiccups. Ethereum spot ETFs just dropped. Issuers are queuing up for Solana and XRP. Fees are already falling. Some spot ETFs cut expense ratios to 0.19%. One day, the SEC might allow in-kind redemptions, shrinking tracking error even more. Keep an eye on headlines, but don't wait for perfect. Start small, learn by doing.